Thanks for joining us at XM.com. You're watching today's Daily Market Comment by Rafi Boyadjian. I'm Cristina Marujos. The European Central Bank meeting is undoubtedly the focal point for investors on Thursday in what could turn out to be the most important policy shift since Draghi's whatever-it-takes moment. The ECB is almost certain to announce an end to ultra-accommodative monetary policy. Policymakers will probably wrap up all asset purchases by early July and pave the way for the first rate hike in over a decade later that month. However, there is some uncertainty about how fast the ECB will move in normalizing policy. Hawkish Council members are pushing for a 50 basis point increase in the deposit rate in July. If Lagarde fails to provide clarity on the size of the hike, it would leave the door open to a steep rise in borrowing costs over the summer. The euro remains supported in the $107 region. The meeting will likely determine whether the single currency breaks above or below its recent tight range against the US dollar. In equity markets, nerves are heightened amid growing concerns of economic slowdown and fears that central banks may have to get even more aggressive to rein in inflation. Hopes of inflationary pressures fading soon have been dampened after oil prices climbed to fresh highs this week. OPEC's reluctance and inability to significantly boost output, China's loosening of virus restrictions, and the European Union's recent oil embargo on Russian crude have all contributed to the recent tightening of the oil market. The S&P 500 ended Wednesday down by 1.1%, and the Nasdaq Composite closed 0.7% lower. Futures started the day lower, but are edging up now. The slight risk-off tone might be aiding the safe haven Japanese yen to halt its endless slide. The dollar brushed fresh two-decade highs of 134.55 yen overnight, but has since pulled back. The yen edged up against its other peers too, while the dollar was broadly flat, awaiting some direction from Friday's U.S. inflation data. The New Zealand dollar was a surprise outperformer on Thursday after being on the back foot for much of the week. The Reserve Bank of New Zealand outlined its plans today that it will begin selling New Zealand government bonds with the aim of reducing its holdings to zero. New Zealand yields shot up after the announcement, lifting the Kiwi in the process. Thank you for watching the Daily Market Comment here at XM.com.